Well, hello everyone. It is 2 o'clock, so we are going to go ahead and get started. My name is Dana Myers with Southeast Community College, and I would like to thank all of you for joining us this afternoon for Business Survival Tips. Our goal with this webinar is to help our business community during this unprecedented time where we are being faced with many challenges. But before we begin, I want to mention that we will be placing participants on mute and encourage everyone to submit their questions in the Zoom group chat. At the end of the presentation, we will answer as many questions as our time allows. With that being said, I would like to introduce Dave Hansen and Tom Obrist. As the former CEO and current chairman of the board of Swanson Russell, Dave Hansen has over 31 years experience as a business leader. Dave has spent a great deal of time improving efficiencies, processes, and managing expenses relative to income. He has managed 3 layoffs in his career, with the greatest challenge during the 2007-2008 recession when he was faced with layoffs after losing clients. Today, Swanson Russell is Nebraska's largest advertising agency with 175 employees. With over 40 years' experience as a CPA with Dana Cole, Tom Obrist has extensive knowledge in the field of accounting and business administration. Tom received a Bachelor of Science in Business Administration from the University of Nebraska-Lincoln. He began his career with Dana F. Cole and Company in 1972 and was a managing partner for over 30 years. He is a member of the Nebraska Society of CPAs and the American Institute of Public Accountants and served on the Nebraska State Board of Public Accountancy for 8 years. A big thank you to both of you for being with us today and sharing your wealth of knowledge to help support our business community. It is very much appreciated. Dave, with that, I will turn everything over to you and Tom.
Great. Sounds great. Thanks, Dana, very much. And thank all of you who are out there participating. We're going to go through this business survival tips webinar in 2 different sections. One, I'm going to approach it from the perspective of a business person and what one can do primarily to find out what we need to do to react to the changing business environment and some options to consider reducing expenses when revenue is going down. Our goal is to keeping you in business and positioned well until the pandemic has run its course. Excuse me, I'm going to back up. Luke, I can't see. I got people on the right-hand side that is blocking my my text.
Oh, the text of your PowerPoint? There should be some buttons at the top of that little window that you can click on to change and move things around.
Okay.
Does that help?
Excuse me, folks. Shoot, can't quite see that. I think I can read through most of it, but our goal is to keep you in business and well positioned for the future. So when this pandemic ends, and it will end at some point, whether that's 2 months or 6 months, that your business is in good shape to return as normal can be. Now, some of the things that when we put this PowerPoint together and this presentation together, as you are aware, the government has continued to come out with programs for small companies under 500. And so some of the things that I'm going to ask that you consider, not necessarily do, but I'll share with some of the things that we've done, maybe changing now with some of the government assistance that's available. So we need to react to the changing business environment. And so here are some of the options to consider. Some items to consider modifying. In most businesses, it's important to over communicate to your staff the financial situation of your business to demonstrate transparency. Your staff will appreciate this kind of information, whether good or bad. One of the things that we have been doing at Swanson Russell is 2 or 3 times a week having some communication about COVID-19, about our policies, about the requirements of the CDC recommendations. We have about 125 people in our Lincoln office, and we typically have maybe 5 people there a day. We have not gone to mandatory work at home, but most people are working at home. But the communication, especially since we're not seeing each other personally, is absolutely critical. The second thing is to look at your staffing. Uh, Put a hold on any new positions or open positions. Staffing is one of the biggest costs in most companies' expense sheets. For us, it's 50%. And so the first thing we did is take a look at staffing. Take a look at a wage freeze. We plan our raises at the beginning of the year for the rest of the year. They happen throughout the month by month. We are taking a look at a wage freeze. Doesn't mean that it might come back in 4 or 5 months, but the reality is the coronavirus has caused a lot of our clients and a lot of your customers to see a reduction in their revenue. That reduction in revenue is going to have an impact on the money that they have available for you and your budget, and the ability to buy your products and services. So the coronavirus is definitely having a big impact. I'll give you one example. One of our clients is Visit Omaha, the Omaha Visitors and Visitor and Bureau. Can you imagine? They make their revenue by having people come to Omaha for various activities and events. They lost the first round of the NCAA basketball. They lost the College World Series, and they're going to lose the Olympic swim trials that they've had. That is hundreds of thousands of dollars of lodging and incremental income that was going to come into that community. Unfortunately, the staff has been almost cut in half. The budget's been way reduced, and that affects us because we, they have a budget and they don't have the money now, so it's having an impact on us. The same thing with other clients that have had. We had a client that was importing goods and services from Italy, or goods from Italy. That's gone. That client just is putting everything on hold for until we get through this. So in your case, whether you're a 4-person shop or a 200-person shop, I know that your clients, customers, have been impacted by this, in most cases in a negative way that will ultimately trickle down to you. So look at the staffing, look at possible wage freezes, look at whatever you can do to minimize payroll costs. If your revenue is seriously cut, you may even want to, and you want to avoid layoffs. One of the things that a lot of companies have done is ask people to take a compensation reduction, say 10% across the board, and maybe just for 10 months or 6 months until we get through the difficult part of the COVID virus or 19. It's fair. It's across the board, 10%, whether you're making 100,000 or 50,000, everybody's getting the same reduction. They're holding on to their jobs. They're simply not getting the kind of payroll they were. But in this world where we're seeing 30% unemployment now, that is one option to consider. We did that in 2008 during the recession. My partner Brian Boucher and I bought the company in 2007. And 2008, we go, what the hell did we just buy? Our timing wasn't very good. And so we did have a couple of our industries that really cut back budgets. And we had to, we tried to go as long as we could since we're a private company. But at some point, we have people doing nothing, and we had to have some layoffs. And if you haven't been involved with layoffs, they're not fun. I'd rather fire somebody because they weren't performing well than somebody that was performing well and have them lose their jobs. But before you do layoffs, I think it's important that you look at every position and the essential need for that position. Is the workforce is a common strategy going on, and it must be relevant as the business slows. The government has programs to assist and for people who have lost their jobs due to a reduction in force. So if at this point you have been able to avoid layoffs, I would encourage you to listen carefully to what Tom has to do through the CARES Act. We have applied for a lot of money through the CARES Act, and and if we can go 8 weeks and not lay anybody off, we can get our loan perhaps forgiven, so that we may have several $100,000 or a couple million in our case, where we are going to go ahead and pay people. We're not going to lay anybody off. We can use that money for rent, for utilities, for healthcare benefits. And if we can get through that, that $2 million potentially is forgiven. And we come out in a better situation financially, and we've kept all of our people employed. If you do need layoffs, consider every position in your business and their need. Is it an essential position? It's a common thing happening now all over with layoffs. But again, Tom will talk a little bit about some of the downsides of layoffs if you want to get involved with the CARES Act. And finally, if you utilize interns or part-time staff or contract labor, things that are nice to have, but they're not necessarily productive in terms of billing time or providing production value. Take a look at those. They may not be big costs, $10, $15 an hour, but if you're a small business, every penny counts. So take a strong look at anything that's not absolutely essential, and cut that as fast as you can. Travel, we have gone to a no travel unless absolutely essential mode. And I think that that's something that you might want to consider as well. Travel not only by flight, but and nobody's flying anyway, but or very few are, but even if it's just a long drive, you've got gas mileage, you've got hotel expenses, etc. That's been replaced by the Zoom like we're having now. We have a number of clients, about 90% of our clients are outside of Nebraska, and we are using Zoom all the time. Many of our clients don't office in the same city, so they're used to Zoom anyway. And so what we have found is the Zoom meetings that we've had over the last couple of months have been extremely productive, and the clients have preferred that. So I think as we break through this next 6 months or 9 months, or whenever we get back to whatever normal is, I think we're going to see ourselves not needing to travel as much, because we've proven that you can get a tremendous amount accomplished through Zoom. Another item to consider is the technology related expenses, to minimize those. A lot of companies will replace your laptop every 3 or 4 years, or desktop, servers, etc. This is the type of year where we're saying, hey, if you're used to every 4 years getting a new laptop or 3 years, you're going to have it for another year. You're just going to have to struggle along, but we're not going to spend $2,000 on another laptop. So we're really, really cutting back our technology-related expenses and servers, laptops, desktops, everything, anything and everything. And finally, most companies have fun business events, annual events, meetings, holiday parties, and other activities that cost money. Um, we are looking at canceling those or having them done in a way differently. In some cases, we would have had them by now, so we had to postpone them or do them via Zoom. The holiday party with a company of 175 people is in the thousands and thousands of dollars. We're canceling that to do everything we can to people will be able to get by with 1 year without an annual holiday party. So take a look at those kinds of events, beer and pizzas, etc. We do a lot of that kind of stuff. That a wellness program. Since nobody's at the office, we've discontinued that until we get people back in. So take a look at all of those activities and events that cost money, whether it's a few $1,000s or $20,000, and say, guess what? This is a year that it's not going to happen. And with that, I'm going to I guess I do have one more slide here. New business and growth efforts. One of the things that most companies that have a 401k, they contribute to that 401k. A lot of companies are dropping their match. That's one thing that you might want to consider doing. New business and growth efforts, focus on those that are just giving you the best ROI. We want to make sure that there's a lot of energy that gets put to new business with a lot of companies, whether you're a 5-person company or a 250-person company. Cut back on those things where you haven't had the best return on your investment and just focus on those that where you have. Review and take advantage of the Families First Coronavirus Act. You can go to the website there, and then Tom's going to also talk about the more significant part of the CARES Act. And finally, take a look at healthcare benefits. Review and consider all aspects. You may want to modify how much time you're giving off for maternity and paternity and maternity leave. Take a look at your sick leave, vacation. People will understand that this is a time where there has to be reductions. I'd rather have a job and less benefits. And with that, I'm going to turn it over to Tom Obrist, who's going to walk through some of the highlights of the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act. Tom?
Let's see here once. Can you hear me?
Yes.
Okay. What you have is what I'm going to be talking about is based on what we know as of today. And as you know, these things are constantly changing like everything else. And so consequently, anything that you might want to know more specifically about, the best thing to do is to check on the latest information you can find. And with that, we'll proceed ahead. The law, as I understand it, is over 800 pages long. There are 6 sections to it. And we're going to principally cover the first 2 sections today. The first section we're going to cover is number 1, keeping American workers paid and employed. What that is about it's about the $350 billion of loans the government has made available to small businesses. Small businesses are those with fewer than 500 employees. To be the various businesses that are eligible are small business and private C corporations, S corporations, the farmers, the 501c3 nonprofits, some veterans organizations, some tribal business concerns, as long as they have fewer than 500 people. The maximum loan
We seem to be having a technical difficulty with Tom going through here.
you go to the bank. And what happens is there's an application form that's fairly simple. It includes your name and address. There are a few certifications you have to do. And basically you take the 12 months of 2019 payroll, you divide by 12 and multiply that by 2.5. And that's the amount of the loan that you'd be eligible for. So then what happens is you have 8 weeks in which to spend the money from the date the loans originated. And that money can be spent on payroll costs, which is payroll, health insurance, and it includes a 401k match, and it includes the utilities, rent, and mortgage interest. And so at the end of that 8-week period, and this money has to be spent before June 30th of 2020. At the end of the 8-week period, the latest information I have is you compare the full-time equivalents of a year ago with the full-time equivalents of this year, and for a specified period. If the full-time equivalents for this year are at least 75% of the full-time equivalents for last year, then you are able, a portion of that loan will be forgiven. And if it's forgiven, you don't have to pay, it's not a taxable income to you. And any amount that is not forgiven, it has to be paid back within 2 years. And the first 6 months, you don't have to make any payments. They still charge interest. But the interest for the 2-year period is at 1%. And that is basically how the loan forgiveness works. It's really a pretty good program. And what happened is last Friday was the first date you could sign up as a multi-owner business. And our understanding is that thousands and thousands of businesses have applied, and many businesses they got in on the first day. They were able to have the application in, and it was even approved the same day. Then, and like I said, you go through your bank. So then when the bank has the approval, they then set up the loan papers that you sign with the bank, and then they will take care of the processing of the money. And that's where the money comes from, is the bank is the one that basically loans it to you. The bank doesn't, the SBA guarantees the loan for the first 12 months, 100% of the loan. After that, depending on the size of the loan, the SBA guarantees 75% or 85% of the loan. They're in making the application, and even with the loan, when you do receive approval, you do not have to provide collateral, and you do not have to provide personal guarantees. And so that, of course, helps this process go faster, because they don't have to have all that additional information. So like I say, what has generally been provided when the loan is requested is you provide the payroll returns from 2019. You cannot include any wages in excess of 100,000. So if someone made 125,000, you can only use 100,000 in the computation. And then you take the health insurance premiums, the employer share, you take the 401k match that the employer paid, you add those to, you also add in state unemployment that you paid. So you add those together, you get a total, divide by 12, multiply by 2.5, and that's the amount of loan you're eligible for, up to the $10 million. What happens is, as one can imagine, then with smaller businesses, if the individual is only made 100,000 a year, and you divide that by 12 and multiply by 2.5, they're going to end up with 8 times 2 is 16, probably about $20,000, $24,000 of money. But even that helps that small business. It seems to be a fairly good program, and it seems to be the money is moving into the client's bank account fairly soon. For instance, several of those that applied last Friday, the money is already, some money was deposited yesterday, and some will be deposited later this week. So it seems to be a program that actually is working fairly well. Now, of course, like with any program, there will be changes as to how things are interpreted between now and when it comes time to prove up. So after June 30th, then you'll be able to prove up on, for that 8-week period, did you have the requisite number of employees, and how much of your loan is going to be forgiven versus how much of your loan is going to have to be paid back. And so, like I say, it seems to be a program that's working fairly well at this point. The next part we get is titled, which the assistance for workers, families, and businesses. The unemployment insurance program, to December 20th, they've made some changes. To December 31st of 2020, they made some changes. One is it provides an additional $600 a week to each participant for employment up to 4 months. And that, as I understand it, is in addition to the amount that they would normally receive from the state unemployment fund. It also provides for an additional 13 weeks of unemployment through December 31st of 2020 for those who remain unemployed after the state unemployment is no longer available. They also have some short-term compensation arrangements where an employee can work reduced hours and receive a prorated amount of unemployment benefits to the end of the year. As you can tell, most of these things are all to the end of the year. And it seems like many of these items are to get us through these first 2, 3, 4 months when it is thought it'll be the worst. And so depending on how soon things return to the new normal, one would expect some of these programs may be extended in order to help if things don't recover as quickly as they thought. There are also those recovery rebates that everyone has heard about, and that is if your adjusted gross income is $75,000 or less on a single return, or $150,000 or less on a married filing joint return, each person will get $1,200. So a single person will get $1,200. A married couple would get $2,400. Plus, there's $500 per dependent child. You can even receive this $1,200 if you have no income. And as many of you have already read, they're going to base it off the 2018 return unless you've already filed your 2019 return. Now, since they've extended the due date for the 2019 return until July 15th, it would seem like many people will end up with it based on the 2018 return, other than most people who receive refunds have already probably filed in order that they could receive the refund by now. Then they've made some changes to the retirement funds. You can now withdraw, a person can withdraw up to $100,000 without paying the early withdrawal penalty, as long as it's related to a coronavirus purpose. If you do that, you pay the tax over 3 years. In addition, you're able to put the money back into the plan within that 3-year period also. So if things turn around and you want to put it back in, then you would be able to do so and you wouldn't pay tax on it. They also have waived the required minimum distributions. As many of you may know, the required distributions when you turn age 72 and are no longer working, you have to begin withdrawing a certain amount based on your life expectancy each year. And so for 2020, they have waived that requirement. What with the market down, my understanding is they figured that way people would not have to take their money out if they didn't need to in a time when the value of the fund has probably been reduced. They've also, for charitable contributions, for those of you old enough to remember, they've moved that charitable contribution from itemized deductions to the front page of the return. This is the second time anyway. So they're going to now, you're going to be able to make a $300 contribution and a cash contribution and deduct it from your adjusted gross income, even if you do not itemize deductions. Another thing that has been put in is for student loans. An employer may pay up to $5,252 of an employee's student loan without it being a benefit considered taxable to the employee. What I've not seen is whether or not the business, the employer, can deduct that $5,250 as if it was wages. And this applies to payments made before January 1 of 2021. Then there is an employee retention credit. And that's where an employer may receive a payroll tax credit of up to 50% of the wages paid to employees during the crisis. And the credit is available to employers whose operations were fully or partially suspended due to the COVID-19 shutdown, or where gross receipts had declined by more than 50% when compared to the same quarter in the prior year. This is provided on the first $10,000 of compensation, including benefits. So they have capped that. And it applies to compensation paid from March 13, 2020 to December 31 of 2020. Then other aspects of the law that they've changed, and with 2018, they had many tax law changes. And so basically this next section is changing some of those 2018 changes. That's the great thing about when any law goes through like this, we always have tax changes that go with us. And for accountants that do income tax returns, it's just a wonderful thing for business, but there's just more and more to know, of course, like in any business. So one of the things is the deferral of the employer's share of Social Security tax. You can defer payment of the employer's share of Social Security tax for the balance of this year, I believe it is, with one half of that then is due on December 31 of 2021, and the other half is due on December 31 of 2022. Generally speaking, this is one of those things that a person would be one of the last things you probably want to do. We have found over the years, the IRS frowns upon people that do not have their Social Security taxes paid in. And so having that deferral, while it is probably something some businesses will need to do, they need to make sure they would have the money available when it comes due. Because as we understand it, if you do not pay your payroll taxes, if the business does not, they then look to the people who had the authority to make or not make the payments in order to collect the tax. So this is just an area that is one of those items that probably, if, like I said, it would be better to be the last thing you'd have to do. Then on operating losses, in 2018, they made it so you could not, if you have an operating loss, you cannot go back 2 years in order to receive refunds for the last 3 years you might have made a profit. They made it so that if you had a net operating loss, you had to take it against future profits. Well, this law has changed it back to similar to what it was. You can now go back 3 years to recover taxes from years you might have had a profit due to a loss in the current year. Then they also have modified the loss limitation on pass-through business and sole proprietorships. They had a limit of up to $250,000 that you could deduct against your other income. And so that was changed in 2018. So in 2019, they've taken that away so that if you have a pass-through business that loses $500,000, in theory, you could take it against your other income and offset the two. They also, this whole alternative minimum tax credit has been alternative minimum tax has been an issue for many, many years. And so there are some portions of the alternative minimum tax that you can receive a credit for later if conditions are such. So now what they're going to do is they're going to liberalize that aspect, and you're going to be able to take the alternative minimum tax credit more quickly. Business interest, they had put a limit on how much interest you could deduct based on your income. Now they've changed that to now they've increased it to you can now deduct interest up to 50% of your taxable income. And then they also, in 18, had made some changes regarding what qualifies as improvement property for depreciation purposes. And so they've liberalized that a little more and clarified that some. And so those are the main provisions. Then as you go down the slide, they have many more. Number 3 is supporting America's healthcare system. And this comes to the supply chain and those type of things. Then the economic stabilization and assistance to severely distressed sectors of the United States economy. That's a fairly lengthy section as well. And then section 5 and 6 is just kind of a little catch-all, small paragraph for each one of them. And so, like I said, what we've covered is principally the items 1 and 2 of the CARE Act, and that's as it relates mostly to the business sector. So with that is, and I guess one of the things, if I hadn't mentioned it earlier, I think one of the things to keep in mind is if there's any of this that you want more explanation on or need, it's probably just the best thing to do is talk to your accountant, because that person is familiar with your income tax returns and the financial situation as it relates to the items that are available to you in these various programs. So that's
Tom, I might add,
Okay.
your accounting firm and your bank is also a very good resource.
Yes, that's correct. Yeah.
So with that, we've got some time to open it up for Q&A if there's some that have been submitted through chat or whatever. Dana?
Yes, I do have some questions here. So I have one that's kind of a two-part. So one of our participants posted a question. They are saying that they have heard a number of business owners comment that they are having a hard time accessing these loans. Is there any information you can share on that, Tom?
Well, my understanding is the SBA has waived some of those affiliation requirements that they have in their rules. I do know that we have witnessed examples of where they do have several businesses and they've been able to get the loan. I'm not too sure, I'm not sure at all what specific hoops they might have had to jump through in order to receive those. But it seems like that's possible. But there again, I would think the bank and your accounting people would tend to be able to access some of that information.
Okay. So in addition to that same thought process, and another individual asked, speaking to how applying for both the PPP and the EIDL program, how they can work in conjunction for a business.
Well, my understanding is that you can do both, and my understanding is that the if you have an EIDL loan, it's into the PP, and that's the thing. I guess what I think about is the paycheck protection program that has an element of your loan can be forgiven. As I understand the EIDL loan, those are not forgivable loans.
Okay. All right. So we have another question here. Most of our employees are part-time. Can I use their payroll in the loan amount calculation?
Tom, I'll let you take that one.
I'm wondering if Tom is frozen.
Yeah, he might be having some technical difficulties.
Okay. Because I wonder if I cut him off and he wasn't finished with the last question.
I believe the answer is yes to that. But
Oh.
again, I would double check with your accounting firm and or bank.
You are on mute, Tom.
Got it.
Tom, the question, go ahead and repeat the question, Dana.
So I apologize, Tom. I think you might have had a technical snag there. Did I, had you finished talking about the PPP and the EIDL programs working together?
They'll work together, but what happens is the PPP loan, any amount that isn't unforgiven has to be paid back within 2 years. The EIDL loan, as I understand it, can go on you can have that amortized for up to 30 years. And so some of that is probably more of how quickly you think you can get it recovered. I also don't know what the difference in interest rates are. The EIDL loan might have a little higher rate. My understanding is if you have an EIDL loan already, you can bring it into this PPP program.
Okay.
So there again, the bank would have to help figure that out. The EIDL loan, you go out on, here again, we've just been working with a client on this. My understanding and what we've done is you go out on the SBA website, you enter basic contact information. They then get a hold of you, and then you go from there. Where the PPP loan, you get your information gathered together, talking with your bank, submit it to the bank, and they then submit it to the SBA.
Okay. Okay. Another question we had, most of our employees are part-time. Can I use their payroll in the loan amount calculation?
Well, I believe, let's say, I don't know this for sure, but my understanding is you take that 2019 payroll. And if it includes part-time people, it includes part-time people. But keep in mind, then you're going to deal with the part-time people, full-time equivalents in the prior year in 2019, or that comparison period, versus the part-time people you're calculating FTEs on in the current 8-week period. So depending on what's happened with part-time people, you may or may not be able to receive forgiveness. But if can you include them in the original computation? I believe you can.
Okay.
But there again, in my mind, I kind of take the approach of being very transparent with the bank on how you're calculating things, how you're submitting things, so that everyone is up front on this is how I did it. So there's no problems down the road.
Okay. Another question we have, someone is asking if you can clarify what options are available for businesses that have experienced a decrease by 50% in quarterly receipts.
I might be having problems again.
Yep, just see me. You may have a technical snag.
If receipts are off 50, I'll wait for Tom, but if receipts are off 50%, this is where the CARES Act really comes into play, because they're not looking at your receipts and sales compared to a year ago. They're looking at your full-time equivalent employees. So if you are able to have the same amount, let's say you had 20 a year ago and you still have 20 now, and you're not laying anybody off, then you would qualify for a loan that would be forgiven as long as there's no layoffs after the first 8 weeks that your loan is approved. It won't help with your 50% sales drop, but it could mean that you've got 2 months of salary that is being paid for by the government.
Are there any,
Well,
and maybe
that's
there, oh, go ahead, Tom.
that EIDL loan, that relates to gross profit too. And so depending on what your circumstances are, it may be more appropriate. It just doesn't have the forgiven piece. So if you can do both, it would make sense to do both, it seems to me.
Okay.
And I think the SBA and the bank would be the best place to find that definitive answer.
All right. We also have another question. Please reconfirm how to calculate the potential SBA loan amount. Is it 2019 payroll return amounts plus company retirement contributions plus unemployment insurance costs?
Basically, what they call is payroll costs. And you begin with compensation, and that would be gross wages. So if you have So it would be the gross wages paid to the employees up to $100,000 on any single employee who makes more than 100,000. So you take your total wages, you take off out of that total, you reduce it by the amounts that are over 100,000 per employee. Then you add the employer's share of health insurance and the employer's share of 401k match and the amount the employer pays to the state unemployment. And you add those numbers together. You do not include the FICA match. That is not part of the calculation. So you add those numbers together, you divide by 12, and then you multiply by 2.5. And that is the way the loan has been calculated as we've seen.
That's the maximum amount the loan can be applied for.
Okay.
Correct. And then
All
you
right.
can, when it comes to using the funds, you can pay the payroll tax, you can pay the payroll, the health insurance, employer's health insurance, 401k match. And then in addition to that, you can pay rent, utilities, and mortgage interest.
Okay. Are there any
And
other
we've used,
questions?
as I understand this, you can either use the calendar year 2019, or you can use the 4 quarters prior to April 1 of 20. But since most
I think maybe Tom had another snag.
I think
Looks
what he's been saying to us is that since most people have the 219 wrapped up, that's what they're using it to base it upon.
Yeah, but that would make sense. I'm sure he will rejoin here in a moment. Were there any other questions that anyone had that they would like answered? We can probably take one or two more. Otherwise, oh, go ahead, Dave.
I would just add that when we went through all the considerations of cutting costs, reducing costs, all with the goal of not laying anyone off, we went through all of those items that I discussed earlier. But once this CARES Act came out, it is so much more significant to you as a business owner or entrepreneur that it is absolutely critical that you understand that, work with your banker, work with your accounting firm or accountant, because even though some of the things that we've done will save us a lot of money in the long run, nothing will save you or give you the opportunity to take advantage of this $350 billion small business loan, the CARES Act that's been on the line. Because we may be able to save some money here and there, but if we can do what the CARES Act is, and we've already applied, we've already gotten approved, if we can follow through with that, it will generate, basically, it will pay for 2 months worth of our utilities, our rent, our health care, and our payroll. And the government pays it. And there's no way that we could do anything else that could save us that much money. So it's one of these things where sometimes the government feels that they've got to do something and they've got to do it fast, and maybe they haven't thought it through as much as they normally would. But because of the bipartisan nature of that the coronavirus has put us in, the government is literally giving out money. Not just the $1,200 to people, but they are literally giving out money to small businesses. And I've talked to a lot of small 4-person businesses, and they are looking at 2 months of their payroll, interest, utilities, rent, and everything being paid for as long as they don't lay anyone off. And it's a huge, you just, I can't emphasize enough, make sure that if you don't have the understanding of that, that you get it, and you get it quickly, because that $350 billion, I think some big banks have already shut down accepting applications like Chase and whatnot. But you can lose, most of these can be used by local banks. We're using our local banks here. And so it's not just the big banks that you need to go through. The bank that you're working with. They'll know all about it.
We do have one more question, and thank you, Dave. We do have one more question if we can squeeze it in. Question is, if we furloughed people initially before the CARES Act came out and they applied for unemployment, but now that we have the PPP and CARES Act, we want to bring them back, but they can stay home because of children. Does it need to be the same person or just equal FTE? Does this still work?
Tom, are you there?
I do not know that for sure. No, you can rehire people, but I have specifics on replacement people. I think the idea that we all know the same people that were there a year ago will not be there today, just by virtue of that's how it works. So the idea that you couldn't hire new people would seem to me contrary to the intent of the law. That I don't have that answer.
So there might be potential to bring back the person they furloughed and then potentially
My
apply
understanding,
for
they
the
can
PPP.
hire.
They can rehire the same person. Okay.
Correct. That's my understanding.
Okay.
And
And then
that-
just,
And
oh, go
that's
ahead.
where
That would make sense, Tom, because of
what I think about with all of this, I wants to be on pretty solid ground before you decide exactly the direction you go. Because when it comes to how much is forgiven, you don't want to find out how it was interpreted. It's just not going to work.
And I'm wondering now that I'm thinking about this question, I'm wondering that they have furloughed someone. They would like to bring them back, but that person cannot come back because they need to stay home with their children. So now they're thinking, could they? I think maybe that's the question. Would it have to be the same person, or can they just hire? Yeah. Okay.
Yeah, that was my understanding of the question.
Okay, good. Another question. For the SBA loan amount, what if my number of employees has changed, lowered from 2019, unrelated to COVID-19? So my payroll amount in 2019 is lower than 2020. Trying to figure out what numbers to use for SBA loan calculation.
Well, when they used the 2019 payroll, it would seem use the number of employees that were included on that 2019 payroll for FTEs. And then if they borrow that maximum amount and they do not have that many employees anymore, and if it's less than 75% of the employees they have, need to be prepared that some of that money they receive will need to be paid back within 2 years. I see nothing that says you have to take into account what your current business is doing versus what it did a year ago. So quite frankly, it would, even though
Well, I think Tom probably will come back and finish that thought. So while we wait for that to take place, I do want to let everyone know that we are going to post this recording. And Steve is going to let us know where we can locate that. So if you do want to go back and view this particular webinar, you will be able to access it. We will make it available. Dave has also put his and Tom's email and phone number here for you guys as well. I encourage you guys to reach out if you have any additional question. Steve, I'm going to have you just touch base and let us know where they can find this recording. And then Tom, I know you had a glitch if you wanted to jump back in after Steve's done and kind of finish your thought there.
Well, while we're waiting to hear from Thomas again, I'll just chime in. We'll place this recording either on our website, on the SEC Entrepreneurship Center website, or on our YouTube channel. So you'll be able to find it there. And once we find a home for it definitively, I will make sure that we post that on our social media and get some email notifications out.
Awesome. Thanks, Steve. Tom, did you want to finish up your thought on the...
Oh, the number of people?
Yeah.
Yeah, the thing about it is if it would seem to me that if you had 100 people last year and you were down to 75 this year, just by virtue of that's what happened to your business, there's nothing that we've seen says that reduction has to be related to the virus situation. So it would seem like you would still make the application. But the problem would be is if you have less than that 75% of people this year versus the comparison period last year, then you need to, if you borrow the money, you need to figure that you're going to pay it back within 2 years. And that's where I come back to. I think the best thing a person can do in this whole loan process and the forgiveness portion of it is to be very transparent about what you have and what you're doing. So there are absolutely no questions at the end of the day.
Good advice. Well, we are kind of at the end of our time. Dave, Tom, any final thoughts before we end for the hour?
No, I just can't emphasize enough to really understand. And the CARES Act is something that, like I said, when we started this thing, we didn't know anything about it. And this whole webinar could have been just on the CARES Act, because that is where you have the best opportunity to have the government help you in so many ways with so much money. And if you do it right, you can take a loan out of 100,000 or whatever and never have to pay it back. So to Tom's point, just make sure that you are very transparent, that you're giving everything up front, so that when it comes back and time for them to measure where you were and where you are, that your loan in fact can be forgiven. It's a tremendous benefit that I've never seen come from the government.
Very good. Tom,
that's good. I don't have anything up to add, no.
All right. Well, thank you again to both Dave and Tom for sharing your knowledge with us today. We really do appreciate it. We will post this recording of today's webinar. Just go to the SEC website, go to the Entrepreneurial Center site, and you should be able to locate it. And other than that, thanks again, everyone, and have a great day. And let us know if there's anything else we can do to help support you through this time.
Thank you.
Thank you.
You bet.